Hey everybody, DayTraderRockStar here with you, and today we're going to go over the methodology in a review session. I want to make sure everyone's on board exactly what our goal is in trading. I see a lot of people, a lot of new members and stuff still finding themselves over trading. Over trading, it's going to be it's going to be the worst thing that you're going to run across in this endeavor that you want to take on. And over trading is basically taking trades that are not supposed to be taken, and you should have a game plan. And I'm not going to go into everything here and waste all the time. I have plenty of videos out there how to set up your business plan and how to make your methodology sound, and use the methodology that I have here, because it is sound. It works so well. It's the lack of discipline, waiting for the setups, and just being in front of the computer at a certain amount of time to be in front of those. All these things, it's not a perfect formula for everyone. It isn't a perfect formula. Not everyone has the time to sit in front of the computer. We try to automate stuff, but there's issues with that. And basically, identifying these, learning how they move, developing the when we talk about quad rotations and divergences and how well they work, and we can point them out. There's certain things that we could even tighten up, and kind of get people on board a little bit better. When I say on board, a lot of people are just looking for that divergence, but they don't know why they're looking for divergence and where divergences will be found. Knowing where divergences will be found is half the battle, right? Then you don't have to put yourself in front of the computer all the time. And what do I mean by that? Well, all right, you don't have to be mentally in the game. Because what we're doing here and what I'm doing each and every day, and I'm not going to go into the basics and foundations and methodology. You can do that at DayTradingRadio.com. That's where I'm broadcasting every day since 2007. And I teach this each and every day. Check the information in the description of the video. There's a link there for a 10-day free pass too. So just use that and check it out and get on, get on the screen and watch the trading all day long. And what I'm trying to do during the day is point out these, teach and point out the trades and trade, because it works and it's live. And I want to go over and kind of break down this as a review for the whole methodology. And the whole methodology comes down to really one foundation. That's the divergence. Even though we have our flag setups and we have some maybe just quad rotations. The truth is, this whole thing works because of divergences and being very close to a divergence if we have one, and lining up divergences with other things. This is very important. So I'm just going to talk about the first thing I do when I come into the market. I don't really care which way the market's going. I do care. I want to know the strength of the market. I think that's very important, knowing the strength and what's the current news and the current trend overall. If it's been choppy and it's just consolidating and there's nothing big out there, that's fine, And if it's the opposite of one or the other, that's fine too. As long as we know, then we could trade with the trend and understand other things that happen in trendy markets. So in this case, I'm always going into the markets here looking for trends. And a trend is just a move. It could be, and again, I want to be kind of simplistic here, but even everything, if I was in front of here, I'd be measuring this out. This is what I do. This is, I identified the trend because I know that in a downward channel or an upward channel, there's always a channel break. Eventually, in the markets, nothing goes straight up and nothing goes straight down. And if you identify the time frame you're trading in, you'll really kind of realize how the market moves a little bit more. You have a certain move, and then you have another move, and maybe you're averaging 4 or 5 points on each of the moves before the reversals, versus maybe looking at something bigger on a bigger time frame. But this is all on the 1 minute time frame. So I'm always starting to look for a directional trend, really a channel. I want to find those channels, and I wish I could just delete all this here. I wonder if I can here. Hold on a second here. All right, here we go. There we go. I got a new chart here anyway. So we get in here, say we get in at 9:30, 9 o'clock here, and we're just watching the markets, and we pretty much see that the markets, I always look back and see where we are in relationship with the 200-period moving average and the VWAP. If we're above that, it's usually a good sign. Above the smaller moving average is an even better sign. If we're holding above the 50 and really stuck above the 20, that's a good sign for, just a nice little rally that seems to be starting. Again, this is right at the open here. So the market kind of opens up and kind of channels out a bit. What I'm looking for are these channels, this equal kind of distance move in a directional way, and we're just going to identify that early into the pattern as we can. It could be we saw that spike up there. I used to use the closing prices. I don't use the candles, the wicks. I usually use the average if it comes down to a big decision. I try to take the average of all the wicks and the closing candles. But normally it's usually the closing candles we want to concentrate on and let the market identify the channel for you. You don't have to go like, oh, this thing's all messed up, it's over here. No, that could be a bad print. It could be one contract. It doesn't really hold weight on the channel. This is the true channel, closing prices. So once we start to establish that, we know that we're going to start to look for a reason for it to pivot. And my job is, and not what hopefully your job is going to be, is to identify pivots. And pivots are when a trend is moving, in a different direction, or it changes direction, and it leaves a pivot. All right, that's what we call a pivot. So you have a move up here. You could just kind of, and here you move down. Here is your pivot. You have kind of a move up. Oops. You can even look at once you have that established trend line here. This is actually something a little bit different because we broke through it for a second, but you'll see everything come into channels. Everything will be into channels. Not everything will be perfect, but once you identify a directional, you see this? Once you start to identify a directional path of this, you're looking for these areas right here, and we can find those very easily by how we have our stochastics are lined up now. So our 9-3, 14-3, 44, and 60-10 kind of help us determine what we are seeing here. Now, a lot of times we talk about that 60-10 as our quad indicator. That's our 9-3, 14-3, 44, and 60-10 all have to be under 20. And when that happens, we have a tendency to see reversals, big reversals or big moves in the opposite direction. And the 60 is the key, because the 60 is just as our 5-minute, it's our 5-minute candles. Basically, it's our 5-minute time frame if we were running the 9-3 stochastic on it on the 5-minute. So we know that's just getting oversold. If we're looking at our 5-minute time, so we have a 1-minute oversold and a 5-minute oversold and a possible divergence here, which we talk about that in a bit. But the quad is the important part. So there's only a couple reasons that we're looking for channels, because pivots are usually formed by quads or divergences, and and when you've been blessed, you get a quad divergence. All right, so that is very key. Now, I specialize more on the pullbacks and upward moving markets. I like real strong divergences in a flag on the bigger channels. These are excellent, not to say that there were any there. And again, I'm looking at this, I guess this is on Friday, maybe. And what I'm looking for are areas where we have our closing prices, kind of a lower low or a double bottom, Now it's, let me see what that is. Oh, that's nothing there. I thought that was a divergence, but it isn't. I have to check my eyes. Nothing there, nothing there. And I'm always looking at the lower part of the channel. So if this starts to pull down into the channel line, I'll start to see what I like about it. Maybe I'm always looking for that divergence first. So I'm looking at that 9-3, 14-3. I'm looking at this low and this lower low. Right when we make that lower low, if we're holding above that 20 line, that's very, very important to me. And that's where my trigger is going to come, because I'm already on the lower portion of the trend line. And now I have this. And if this was all lined up too, that gives us a quad. It's not there. But again, there's no right or wrong. It doesn't mean that we need to come down under 20 each time. This is actually stronger when it turns above that. We just, we do like the combination of when everything comes down to the 20 at the same time. Now I'm just going to go out here a bit. We'll go out to the previous day. So, all right, so here we go. Well, sometimes, actually, we're looking at the NASDAQ sometimes, because the NASDAQ actually gives us some really good, tighter, it seems to be a little bit tighter in the candles. So let me bring up the NASDAQ here for a second. We'll do the second. I just think they're easier to see on the NASDAQ. Oh. All right, I put this on the NASDAQ just to give us a different perspective of this, and kind of, like I said, I sometimes see tighter movements in this. The chart looks, again, I'll just go through a few days here and just kind of point out what we're looking for. The concept, the divergence concept, how important that is when we start to see the momentum. We have to stick to that. We have to stick to the purest type of divergence you can, and that's probably the hardest thing to do. And when we talk about that, really good, at one point we're going to have to draw that line from our low. Here's the one right here, from our low to the lower low. Now, even though the prices this is much lower on the candle, that counts. I mean, I do appreciate a big long tail. We call this a tail here. That's way underneath that, and what we call this reversal candle. A reversal candle is any type of candle that is the tail is twice as long as the body. In this case, the body is very small, so it doesn't make that. It's definitely a reversal candle. But in some cases, you have a much bigger body, and you want to make sure that tail is really long. That's right here. This was a little reversal candle, and it was a divergence. That's a very good setup there, and it's a 14.4 divergence, and it's almost a 44 divergence. But I would count that as a 44 because of the steep angle, and how well these two look. And again, here's your divergence, and here's your move. All right, so here's your move, and that's basically what we're looking for. And to identify it, even put that in even a better zone here. We look for that. Now, this is probably an original channel. We kind of put that in. I don't know what happened here, but busted out. But, I'm just always kind of put what I did in there. And I probably would adjust this after if it did break a higher. I'd probably adjust it afterwards. I'd keep that bottom one in. And then once we started coming down to that bottom one, we're in that zone. This is the environment that we're looking for. In all cases, every single channel line down. You see all these little lines down I'm just making right here? Anything that connects on the bottom is going to be a potential divergence setup. Here's one right here. All right, it's about starting to see them and how to find them. To find them is you're going to find these little downward channels right here. And once you start to see it and you see that rotation, that's going to give you, and again, we're going to go through these. I'm going through them right now. Now, this does not qualify. That qualifies. This qualifies. Let's go back here. Here we have. This one could qualify. It's on borderline, but it would definitely be a runner, a nice little pop on that. And what these are doing on a 1 minute time frame, they're giving you bigger than, remember what this is doing. The divergence is basically the pivot. So we have a little downward channel. So what we're doing is we're breaking the channel. It doesn't mean we're going to make the lows, but this is part of the the ecosystem here. It's divergence, reversal, pushes back up, new channel, might be have another reversal coming back down. But we could read what's inside, underneath the hood here, because we could see the stochastics are printed out. Our stochastics are printed here. The formula is printed between 0 and 100, how those candles are starting to close on a scale, of looking back that many periods, and it starts to turn back up, and we're starting to move down lower. The rule is momentum is going to lead price. Price is going to follow momentum. Momentum is seeing this and seeing this down and seeing the momentum shifting and going up while the price is lower than the previous momentum shift. So that's what we're really looking for, and you have to stick to that. That's our qualified trades. Now you could find those on the upside too. If you can find those, a slight little up. But you also have to be safe on understanding market direction. If the market's been trending very strong, lots of times you'll get divergences that'll blow, they'll come back just a couple ticks and then continue to move higher. Really depends on a lot of different key factors. But again, once you start to identify, this is 3 o'clock in the morning. I'm like, 3 o'clock, you'll find this channel. I'm like, all right, we're in the low part of the channel. Is something going to happen here? We have a low, candle low, candle low. Oh, yeah, something happened here. It's a beautiful divergence right here. And it's a 44, it's a 14.3 divergence too. Nothing on this too, but it was almost a quad. Either way, you take all divergences that are on the lower part of a channel line, and you'll see the channel line developing. You don't have to worry about it. Just you'll see it. You'll see the lines line up. Just make the lines, because when we're looking for this is what we're looking for. There's a little divergence right there. That high, that higher high. Remember, closing prices. That high, that lower high. And then down here we have that one. They're hard to see sometimes when you're looking at them. When they're happening live, they're very hard to see. But you'll train yourself. You'll train yourself to see these. And what I'm doing to help you, basically, is, I have these alerts for the members. I'll just throw that out, because you got to hear these alerts I sent out on Friday. So let's go back to the other chart here for a second. All right, I pushed it over to the ES chart here, and I'm just scrolling ahead to on Friday. But as I scroll through, I'm so used to looking at the quad rotation. It's amazing that sometimes you could spot where divergences happen just by looking at divergences. You could just see how, like, I could see, like, these type of angles on especially on a 44 and stuff. Turn back up. That looks, and you could see. I just looked up here, and you could see that divergence right there. And that was after a big pop, but right before that big pop, you could even see a little divergence. That was a sneaky little spike down on those candles, but that was news. I'm not saying you're going to take that, but this is definitely a signal. That is a signal, and we just, and again, we look back here and look at the quad rotation. We actually kind of got down to a quad here and got a little bounce, and then it came back down, and it would be right there, and we got another bounce to 20, and then came back one more time, and then gave us another quad here. That was kind of the bigger one, and it looks like there was a possible quad divergence here. Is that little? Let me see if that was a divergence. Yes, it was. See, that low right there was a higher rotation. So that's what I like. That's what I wait for. I wait for a quad divergence, and the divergence has to be on a 9-3. If it's on any others, that's just as good. And very hard to see, but what we have going for us is we're in that downward channel. Because once we get the pivot inside the channel, 9 out of 10 times our target will be outside the channel. And that's all we're waiting for. So can you get through this point here and get think that the market's running away on, try to get in and get shaken out, or, do stuff here that are just not, you're not focused, or, taking more trades, you're getting more opportunities to lose money too. So make sure your trades, and you're comfortable. I'm showing you, a very good technique. It's not going to work for everyone. Not everyone's going to be able to pull it off. Have the patience, miss them, chase them, entries, taking it off too soon, not letting it run far enough, frustration, all that's coming. This is a technique to get you into a great trade. You put your stop at the lows, and my opinion, walk outside. Walk outside. Let the trade work. Don't get too excited about it. All right? Let it build your confidence in it. Learn to take the bat off your shoulder. Once you start to see these pullbacks, and you'll start to, and then again, some of them at the end of the day, you're not going to take any trades, usually between, for me, 3:30, to 4 to close the last half hour. I don't like it. I don't mind trading overnight. Again, I'm not going to be focused on it, but if I do happen to be here, like right here at 8:15, you could, you're looking at the computer, you're doing stuff in front of your computer, and you just have the charts on, and you see the chart set up here, and you're like, oh, interesting, nice channel, let me see. So I'm down the lower channel, that means, and we're oversold here. So that means I have to start looking for, maybe a possible sign for a divergence or something. Now, it was kind of a little lippy divergence, in the 14.3, even that 9.3 was a little tough. That was tough. I mean, but it did give you a little lip. And it was a quad rotation too. And that was more of a quad rotation. And again, maybe you don't get big moves, but the quad rotation gives you decent moves. Here's another quad right here, and you get another decent move, right? Here's another. This is a quad. How we represent a quad is by our lines down, all under the 20, and we're usually in that same good area. And then you'll start to micromanage these too much. You'll be starting to look for these and trying to really, here was a quad anyway. That's pretty funny. I wasn't even thinking that was a quad, but that was a quad. And again, nice little move back up. So channels usually break with a divergence or a quad rotation. So when we talk about change of trends and identifying our trends, that's our first thing we want to learn how to do, is how to make a good channel. I usually call it the 1, 2, 3 technique. Is where we find 3 pivots, 1, 2, 3, 4, and just draw it in there. And if it breaks down, comes back and holds, it's still good. Markets are not perfect. We're looking for the relationship between the price and the stochastic. So this was kind of a good divergence right there, if you believe it or not, on the 60-10. 60-10, it was actually a divergence right there, that's pretty good. At 12:30 in the morning, that was actually a nice divergence. You don't see that too often overnight. And of course, you can only determine it by it has to be under 20, has to be over 20. You don't see that anywhere. If you see it, point it out, and I'm guaranteeing you're probably going to see a move like this. All right. Here, what do you say? So maybe as Matt Damon said in the movie Rounders. And I should play that for you because it's such a good thing. Here, let me play that for you. I don't know if you can see this or not. There's an opening scene, Rounders. It's about what Matt Damon says. And I kind of use it. Same philosophy for trading.
Listen, here's the thing. If you can't spot the sucker in your first half hour at the table, then you are the sucker.
No, there's nothing about that. This is the quote. Something about grinding it out.
Guys around here will tell you, you play for a living. It's like any other job. You don't gamble. You grind it out. Your goal is to win one big bet an hour. That's it. Get your money in when you have the best of it. Protect it when you don't. Don't give anything away. That's how I've paid my way through half of law school. A true grinder.
See that? I don't know if you even heard that. Probably dead air. Anyway, the important thing is to take the right trade. Your job is to get a trade an hour. Make a trade, good trade an hour. That'd be great. And waiting for those is the hardest part, and not taking something that's real sloppy. All right. So it takes a little time. You can do multiple time frames, different indexes. They all show up all different places. NASDAQ, ES. I got a lot of cheat sheets for you on the site. If you try out the free trial, if you're not a member, it's right on the top of your dashboard when you sign in, and you're in the dashboard. Go up to Playbook, and it has the business plan and how to trade like this. Everything. There's a lot of good information. Because I just want to review this for the traders who out there are trading this. Don't get frustrated if you find that things are sometimes too choppy. Like here, maybe here things are a little choppy here going into 950. Actually, this was the 950 area, 950 reversal. This was actually a little pennant formation that the market kind of broke out of. But there's always a reason, and you have to watch the news. There's so many different things you have to prepare for to be successful. You have to know where the news is coming out. You want to put yourself in front of the markets when the markets are telling you. Here was this was actually a nice quad rotation, possible even divergence if you argued the case, and that was kind of the low, and then we got very close here, but no cigar here. We had a nice low here. Putting yourself in front of the markets at the right time is the key. All right. So I was going to show you something real fast. I did the on Friday. I do an alert system on the Voxer Alert Network. You sign up. If you get it as a member of Day Trader Radio, a paid member of Day Trader Radio. You get that added in your membership. It's really a great feature. And if you're not a paid member, you can get it at patreon.com/Day Trading Radio. It's only $20, so it's really good. So let me see if I can pull this up for you fast. Not the way. All right. So this was. Let me sign in. This was. So this was Friday. Let's see. This was an alert. It's 11:20, 9:45. All right. So let's go check. So if I see a setup, usually a quad rotation divergence or something like that, I'll send an alert out to you. It'll show up in your phone and it'll talk to you. It's on the Voxer network and it's really great here. So this is what we were sending out on. This happened at 11:30. Looks like. All right, traders, coming up on 11:30, 2 minutes away from 11:30. The market has moved all the way up to our 60-50 area, and there's a major trend line up here, right up against 60-50. So there is a quad rotation sell zone here that looks pretty good to the downside. At any point that we've had not taken profits today looks like, right at this point, looks like the best place to take your profits. All right, so I think we nailed that too. It was I think I have it on the other charts here, but we had a nice trend line up here that we actually topped out at. So if we do have something like that, that was actually from an earlier alert. Let me see what that other alert was. That was the one we took. That was going into this one. Let me see what this. All right, traders. It is 9:45 a.m. The market has just starting to enter into a quad rotation phase. Here. And we're on the lower trend line right about the VWAP. The market's very strong to start the morning off. Looks like a bullish flag that's forming, and we're looking for some upside here. So that's what we call that one right there. So, I try to put you in front of the good setups, the important setups, the high probability setups. So that is something I love doing. So maybe you get 3, 4, 5 alerts. That's the ones you want to be in front of, And the other ones overnight, well, you know what to find, you know what to look for. All right, if you have any questions, just email me. I'll get back to you. We'll start the futures on. I think the futures are open right now. I'm going to start those up right now and get going. I'll be back.